Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. Okay, so let's make a full breakdown of the situation that we currently have for USD CAD because it's a very interesting price action that the market is currently showing here. Now, starting from the monthly, we can see how we got a very strong impulse to the downside. But in this impulse, there is one candle which is not related to the move, which is exactly this green candle here, showing that even though we had this move to the downside, when the market was around this zone, it showed a rejection to the upside, meaning that here we had very strong previous monthly support where the market stopped, which now that the market has broken to the downside is turned resistance all across this area. And as we're currently testing previous support and resistance, we can see how multiple times the market got rejected to the downside. Look at all these wicks. And as we are once again testing this resistance zone, there is definitely the possibility to see another rejection to the downside, even though it doesn't need to be a long-term rejection. It can even be a short-term rejection. In fact, if we drop down on the weekly, we can see how also here in the weekly, the market has been creating a series of equal highs, every single time rejecting this resistance. We already could see that on the monthly. Here on the weekly is even more clear. And as we are approaching this incredibly strong resistance zone, in fact, if we look here, it's very clear how the market rejected it to the downside. At the moment, we have just entered inside of this exact same area, from which once again a short-term rejection to the downside definitely seems a possibility. Going down on the daily, what do we see? Now, from a daily perspective, we can see how the market just printed this overextended W formation. Now, in general, after the creation of an overextended W, what you would like to see is for the market to create a correction at least to the 0.32 Fibonacci taken on the daily impulse. Now, in this case, the daily impulse is from this low to this high, meaning that what we could expect is a potential correction to the 0.32 of the Fibonacci taken on this daily impulse, which in this case would be at this area, meaning that we have a first downside target that is potentially at this zone. Now, if we go and see what we have when it comes to the commitment of traders, which is basically the COT data, so what the non-commercials, so the biggest speculators in the market are doing. So the non-commercials are basically those institutions that don't have a direct kind of interest in that industry. Therefore, that is why they're defined as the non-commercials. So they are in the money just to speculate, okay, to actually turn a profit by speculating in the market. So the closest thing that we have from an institutional perspective to actually traders, if we go and see what we have on the CAD, so to see their positioning on the CAD, we can see how lately net positions have been increasing. We went from having minus 14.4k net positions all the way up to having minus 1k net positions, with the last report 8.7k longs getting added, reaching 39.2k longs from the 28 that we had here, and getting decreased in shorts from 50k to 40k. So 10k shorts getting closed and thousands of longs getting added as well, indicating that overall in the short term, we could easily see some strength for the CAD. Now keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, this actually means that you're checking CAD USD, but we are actually interested in USD CAD. That is what we're analyzing, meaning that you simply have to invert everything that you're seeing here. Because if on CAD USD, you're seeing strength, as we have just defined, on USD CAD, this actually means weakness, because if the CAD gets stronger, USD CAD is going to actually melt to the downside, meaning that overall, we could easily expect a rejection to the downside that we had already identified that was possible by looking at this market from a technical perspective. Now, how we could be approaching this potential move to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, also combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. And in this case, as we have already noticed before, the directional aspect of the market indicates that there is definitely the possibility for a correction to the 0.32 of the Fibonacci taken on the daily impulse, which in this case we can indicate being at this level. So this is the first downside target. However, when it comes to confirmations and entries, the best time frames, those are the intraday time frames. So from the 4-hour time frame lower. And when it comes to intraday time frames, at the moment everything is obviously pretty bullish because we are still experiencing very strong bullish momentum. Therefore, only if the market during this move to the upside will start shifting from an intraday perspective, from a bullish to a bearish market, only at that point we could be adding USDcad to our watch list. And if the market at that point would provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the market to complete the pattern at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.